This is the Skin in the Game VC podcast, hosted by Tom Wallace, entrepreneur turned venture capitalist and the managing partner at Florida Funders, along with Saxon Baum, general partner and head of investor relations at Florida Funders. You'll learn from the best about investing in early stage tech companies, so you too can gain the confidence and find the tools that help you succeed as an angel investor. Are you ready to get some skin in the game?
Hello and welcome, everybody. This is Tom Wallace, and welcome to another edition of Skin in the Game podcast. I'm here with Saxon Baum. Hey, Sax.
Tom, how we doing?
Great,
how we
buddy.
doing? Good.
How are you?
Good. All
Yeah.
good.
Yeah.
I'm getting a little bit of sleep here. Had the newborn, so you know how it is. Second kid.
Congratulations.
Thank
That's
you,
very exciting.
Thank you.
So you had a boy this time.
We had a boy. He's a young VC, starting early, only 2 weeks in, but he's got some good deal flow already. So we're excited
Put
about
him
it.
to work. That's the spirit. Welcome again, listeners, and we're excited to have you with us. We have a really exciting guest today, a local guest, which makes it a great local Florida success story. A lot going on in the tech world and exciting times. I think now is the NVIDIA conference going out there with Jensen, and everybody watches NVIDIA. So we'll see what comes out of that. But without further ado, we'll get started.
Yeah.
And so we're so excited because, again, as I already said, we have a local Florida success story, really, really great success story here from right across the bay in Clearwater, Florida. And we have with us the founder of KnowBe4, Stu Sjouwerman. Did I butcher your last name, Stu?
You did. You pronounce it not Rain Man, but Showerman. Easy.
Not the Rain Man, but the Shower Man.
There you
Showerman.
go.
Okay. that I'll remember that next time. I've only known you for 20 years? Do you think I'd Stu, welcome. So KnowBe4, for those of you don't know, is a really successful cybersecurity firm founded in Clearwater by Stu. And it's a unicorn, which we love having unicorn founders on, and because there's always so many lessons to be learned. And so, Stu, why don't you get us going by telling us a little bit about your background and how you got into tech and cybersecurity?
Absolutely. This is my fifth startup. We started KnowBe4 in 2010. The one before that was also cybersecurity. We built an antivirus product literally from scratch with intrusion detection, intrusion prevention, firewalls. So we were familiar with that space since the mid 90s. The funny thing is that KnowBe4 is literally based on a root cause analysis in the antivirus space, because we had a floor full of tech support people that were dealing with trouble tickets, and we did a root cause analysis, like ask why 5 times, and the cause for all those infected workstations was social engineering. And then I looked around and said, was anybody doing anything effective about that? And the answer was no. Hence, KnowBe4 in 2010.
So social engineering being it was a human issue, right? It was user error.
User error, as we say, right?
Yeah. Indeed. The problem was between 2 ears, and people were being manipulated to do something that was against their own interest, which is the definition of social engineering. So infected workstations because they clicked on a link or they opened up an infected attachment.
Stu, when did you really see the rise of that? Obviously, the internet wasn't extremely popular in the early 90s when you probably started your prior company. When did you start seeing this infiltration of this happen?
The event of social engineering just by itself is really nothing new. Social engineering has happened for, since thousands of years. It's manipulating someone to do something against their own best interest.
Of course.
However, the internet, mid 90s, late 90s, became just the latest venue or attack vector that enabled bad actors to, commit social engineering, fraud, and attacks much faster, and no more borders. You now have bad actors in North Korea and China and Russia, where they can just do this real time. That expands the risk, and the human risk is still the biggest risk that we see that needs to be mitigated. Hence, KnowBe4.
So as I understand though before, and I might screw this up a little bit, but I the simplicity of it I love in that. So I'm somebody working for a company that's using KnowBe4, and I'm just a user, and I get an email that I shouldn't click on, but I do.
Hmm.
That email's actually a fake email from KnowBe4, and then it pops up and says, "Hey, idiot, you shouldn't have clicked on this." I'm like, yeah, well, I do that stuff anyway. And then it shows me a video or gives me some training on how not to do that in the future. Is that pretty much it?
That's
Did
how
I?
we started. Yes, not the "hey idiot," but more like oops, she clicked on a phishing link. Let us explain. Um, it's actually a really great way to train employees to recognize those kinds of phishing attacks and not fall for them. Um, there's also a little button that people get for free. You click on the fish alert button when you see one of these things, and it gets sent to IT so they can handle it. And then there's other things we also do in the sense of, well, if IT gets those phishing links and emails, how do they handle that? It might be that sits in 20 people's mailbox. How do you rip that stuff out? And
Yeah.
then there's real-time training. Is you try to put a thumb drive in your computer, um, and that's not very secure. So we see that, and we send a little message through Slack or Teams with, "Hey, that's not very secure." Um,
Uh,
those kinds of things. It's all human risk management, really.
yeah. So you start in 2010 with this.
Mhm.
You come up with the idea from your previous company. You start in 2010. When did you really start to know that you had something and that this was really, you got
Yep,
go to market fit,
sure.
and customers are, when did it really take off? How long did it take?
Took about 2.5 years to really take off.
It's quick.
Um, Events helped. Let me explain. I started August 2010. Then you're by yourself in a Broom closet, 10 by 10 executive center. Um, we released the product in April 11. Um, then you wear all the hats. You sell, you do tech support, you receive the check, you put the check in the bank, you send the invoice, whatever. Um, so you hire your initial team. You do need product market fit. You do need your pricing figured out correctly. Your marketing collateral. You need your go-to-market motion needs to be mapped out in Salesforce. There's a number of things that need to be in place. Once you have
Sure.
once you have those, the triggering event. Was a gentleman by the name of Yevgeny Bogachev, a Russian, who came out with the very first weapons grade ransomware in Q3 2013. And when IT folks understood, holy moly, ransomware is sent through phishing usually. It will
Mhm.
it will get my whole network locked up. One user with one click can cause this. That's when we took off, and you see a 10-year hockey stick graph to 500 million in ARR.
So did you really use that event as marketing?
Oh yeah,
Were you? Yeah.
immediately.
Yep. Yeah. That's
Was there a
interesting.
major breach rate at that time? Did he hit a certain company, or I'm trying to remember?
This is when this thing started out. They didn't just hit one company, they started going industrial scale ransomware, and a whole bunch of people got infected. At that point in time, that was just 2 Bitcoin, and they were unlocking you. Well, a Bitcoin was what, maybe $1,500.
Yeah.
So for $3,000, you got your network back, but the threat there was recognized, and
Yep.
that's when we took off.
Stu, kind of piggybacking off of Tom's last question, we've seen a lot of businesses post KnowBe4 try to do similar things to KnowBe4 in the sense of creating products to stop these types of phishing attacks. How do you feel about KnowBe4 in terms of positioning as sort of the leader in the market, and then these incumbent players coming in? Do you think that these players ever have a chance, or do you think that you guys have such a stronghold on the market at this point?
Well, you said incumbent players.
Sorry.
You meant
newcomers.
Newcomers. Yeah.
Sorry.
Okay.
Yeah, I understood what you meant. If you want to be successful, which if you look at our trajectory for a second, we got VC in 15. Goldman Sachs came in 2 years later. KKR came in, and that's when we were valued at $1 billion plus, hence unicorn. We went public in 21, and we were taken private in 23. This is kind of a almost 15-year ramp where you create a category to a large degree. So if you're first and largest in that category, you have a massive moat. You do have first mover advantage, but you also will find a number of fast followers, copycats. Ankle biters is how we called them.
I like that, ankle biters.
Ankle biters. And some of these folks have been, snipping and taking bits and pieces. You have to be constantly innovating. You have to stay on your toes. Andy Grove, only the paranoid survive, is very, very true. So 2 years ago, when I saw Gen AI suddenly appear, we said we better do something fast, and we are completely reinventing our own platform. You better disrupt yourself, or otherwise someone will do it to you. If that's an answer to your question.
Yeah, no, it is, and it's interesting because we're looking at a few companies right now that look and feel very similar to larger players in the space, but they're really based now on Gen AI, which the larger players are not. So it'll be interesting to see how that dynamic really plays out.
Yeah.
Yes, you're. It is enticing to go. Oh yeah, we will go to a company that does the whole thing on top of an LLM, and it looks nice and it works for a while. But if you just look at architectural challenges, an ankle biter that says we're going to redo this whole thing on top of an LLM, they will run into scalability problems.
Yep.
And so,
well, the other thing is, speaking to your moat, I think one of the beauties of the SaaS software model, having run a SaaS software company for about 15 years myself, is that it's hard to rip it out. Once you get in there and the customer gets used to your software, and they have all this data, it's not easy to rip and replace. And I'm sure KnowBe4's
that is true. It depends a bit on the type of SaaS software. However, look at what Satya Nadella says about SaaS software in the last 3, 4, 5 months, and he says SaaS is dead. You better start thinking about a whole new business model based on top of LLMs. The LLM is going to be your user interface. So from an investor perspective, this is a very interesting time because a whole bunch of existing SaaS companies are at the risk of being, let's throw a $5 word at it, disintermediated. And there's big opportunity.
Yeah, so as he says that, I'm not sure I agree with that. I've heard that argument from several people. It's been on the all in. They've been saying SaaS might be dead. When you look at like a Salesforce, I'll just use them as an example. Maybe they're not, because they kind of invented SaaS in a lot of ways, or a lot of people think. And Do you think they're vulnerable? You think somebody could easily replace them
Well,
with?
they have the same problems that everyone has. There are people like HubSpot who are saying, "Well, we're going to build our own, Salesforce clone," and they're pretty successful in the SMB space. So there's always vulnerabilities that these large, you know, a SaaS company, there's flavors. If you are a true system of record like Salesforce, you have better protection and a bigger moat than stuff that is easier to replace. So SaaS companies like us, we are very focused on landing multi-product because multi-product is much harder to unseat.
Yeah.
Stu, I'd like to hear a little bit about the acquisition strategy that you guys have. How has that changed going from public to private and now being private equity owned? And then going back to my prior question, when you look at some of these smaller companies coming up, at what point do they become an acquisition target? And is it just for their customer list? Is it for their technology? Talk a little bit about that.
Sure. Um, where a company like ours is kind of moving toward is a platform, a true platform, not just five products, lumped together in a bundle, but an actual single pane of glass platform. And so, from an M&A perspective, you go look at what additional headaches is my customer running into, and can we buy uh, a pre-revenue startup or a young startup where you grab that code base and plug it in your platform. So we actually have just hired ourselves an SVP strategy and corp dev, and that is his full-time job.
Got it. Got it.
So when you going back to Gen AI, um, when you look at where AI is going, where quantum computing is going, I've heard everything from just a matter of time before Bitcoin will be able to be hacked because of Gen AI and quantum computing, and obviously bad actors have access to the same technology that we do with ChatGPT and Perplexity and with DeepSeek and all that. How do you help us understand that? Because I'm not sure I can figure out where this is going, and my guess is some of our audience has the same wonders the same thing.
Couple of questions in there.
Yeah, sorry.
The most important thing you're alluding to is Bitcoin something which is encrypted? Obviously, can that be hacked with quantum computers? Um, Encryption algorithms are post and pre-quantum. Um, there's already been a couple of years the threat of, hey, can quantum hack any kind of encryption? Yes, but this is a cat and mouse game, and your encryption algorithms adjust to, okay, what is the computing power required? So that is an ongoing thing. Game of
So
chess.
the encryption keeps getting better using
Oh,
AI and quantum also.
yeah, the encryption, you can improve your encryption algorithms to a point where you can't hack it even with quantum. So I don't really think that that is too big of a problem. Um, the problem is, if you have a combination of, um, call it artificial general intelligence, AGI, on top of quantum. Now you're getting to a point where there's an intelligence that is outdoing most humans. That's an interesting state of affairs, technology wise. Um, the first country that can leverage that has an advantage. Um, there's risks too, because how do you stop something like this? Most people don't, if they develop a weapon, they conveniently omit to also develop the defense against that weapon. This is, look at history. We haven't learned a thing from history. It happens. It happens over and over again.
When you look at the artificial intelligence on top of what you just described, how far out do you think that is on top of quantum?
That is going to hit faster than you think. Before the end of the decade.
Wow. Okay.
Interesting.
Yeah.
Stu, one thing that we really look for at Florida Funders when we're investing in companies is experienced founders. So whether that's second, third, fourth, or even fifth, to your point, we're looking for experienced founders. Can you talk about some of the differences that you learned throughout your journey, business to business, and really why investing in an experienced founder is something that typically we've seen is a better investment than looking at a new founder?
Of course, I would agree. Having done this 5 times, um, some people say you learn from your failures. Yes, but you also learn from your success because you develop best practices. Um, it is to a very large degree a matter of you have to do it. You have to wear the T-shirt, torn up and all, so you don't make that mistake again next time. Um, a proven track record obviously is the most important kind of requirement that I would say for any investor. You don't want a rookie to make all the rookie mistakes with your money.
Yep.
Although if we do just that, we would pass up on the next Mark Zuckerberg, the next Bill Gates, et cetera, et cetera. So, but we agree with you, and I think that what are the numbers? Like 73% of all unicorns are from second time or non-first time founders.
Yeah.
But yeah, we tend to agree with you, and we do bet on some first time founders, but they're people that we think are exceptional.
Or they've de-risked the asset with substantial traction partnerships. I mean, there's something else there. It's not just a guy in his garage starting something. I mean, we're pretty
it's not
keen
an
on
idea.
that.
We don't tend to fund ideas anyway. So ideas are a dime a dozen.
No, ideas are easy. Execution is everything.
Amen. Amen to that.
What about with KnowBe4 specifically? I mean, things that you learned in your past that you brought to KnowBe4. Did it make this journey easier? Because we've heard from some of our founders that have been very successful. It's actually harder as you become more successful.
Well, the journey of scaling obviously lands the CEO with increasingly harder problems the higher you fly, if you will, because your A players should be hiring A players, because B players hire C players. Old rule. Um, you, you hire the best people you can in your startup. They will solve most of the problems, but the really hard, nasty issues that nobody has been able to figure out, they land on your desk.
Yep.
And and the bigger you get, the bigger those types of problems become. Because suppose you do scale, and suppose you get to 100, 200, 500 million in ARR, that means you also have tons of customers. And that means that the infrastructure that you're sitting on, which in our case is AWS, the code that you built as a startup is definitely not going to cut it when you have 2 or 3 or 4 orders of magnitude more customers. So you have to refactor that code over and over again. And there's technical challenges to that. So only in that area you need very strong people in your CTO. And then there's the whole other side of your org chart. And how do you build that? And how do you make sure there's no daylight in between your functional areas? Because if you're at your C level or your executive leadership team, is there's daylight between, say, product and R&D, as an example. Well, that little bit of daylight at your executive level is going to cause massive rifts down 2, 3, 4 layers down in your org chart. So those kinds of things are also scalability issues, but on an organizational level that you really need to be aware of, because that's just, productivity that severely hurts. Anyway, if you want to stay busy and never have a dull moment, be the CEO of a fast growing company.
Yeah, everybody hear that?
And you love it. I can tell you love it, which is why you're so good at it. When you started KnowBe4, did you bring any of the old band?
Oh yeah.
The old band back together?
Oh yeah. There's at least 50 old people that just jumped over,
Mhm.
and that certainly helps because you develop a certain kind of shortcut communication with, and most of these folks were infosec people. I am dating myself saying infosec today. That is called cyber. Um, but I'm old fashioned in that way. That is information security. We have built products, security products. That's a very stern school of making sure you do it right and you don't build in. Here's another problem that as a founder you're going to be confronted with. You need to do secure coding. You cannot bake in bugs in your code because people will find them. You'll get hacked, and look at the losses there. So as an investor, um, doing a due diligence related to information security and secure coding, making sure that the company you invest in is um, very aware of those risks is pretty much a must these days.
Yeah, good
Agreed.
point.
Agreed.
Very good point. Go ahead.
I was just going to say public versus private companies. Tom, we talk about this all the time, but companies are waiting so long to go public. You have companies like Stripe that's valued, well over 50 billion at this point. I think even closer to 100 billion. You have companies like SpaceX, 350 billion, still private companies. You've gone private, public, now private. Can you talk about some of the differences that you see and maybe what do you prefer as a CEO?
Yeah, very different games. The public game is you're dealing with analysts and quarterly analyst calls. You're dealing with wide variety of people that buy your stock. Um, very different contingents of, well, here's a bunch of hedge funds that are shorting you, and and here is a bunch of pension funds that want to hold you for 5 years. Um, this is an interesting world to live in. Moreover, the stock price, which you are supposed to be responsible for as a CEO, does its own thing because there's macro things happening that you have zero influence over. Um, Executing on a long term plan as a public company is sometimes hard because those quarterly numbers are looming. The moment you wrap up your quarter, there's the next one. So, as a private company owned by private equity, you have a little more leeway to execute a longer term roadmap. But you'd be
And do you
surprised.
prefer private over public in terms of CEO running the company?
It's different. There is no particular, you have to choose your poison. That is a funny way to say it. Um, Private equity gives you a little more leeway to execute on longer term plans. So from that perspective, yes. Um, However, the funny thing is with a company like ours, the PE playbook really is, listen, in 5 years' time, you need to have an exit because the private equity people, your kids are in school. The teachers of your school pay into their pension fund. Guess what? That pension fund is giving $100 million to your private equity company. we are generating the pension of the teachers in your kid's school. This is how this whole ecosystem works. So in three years from now, we need an exit. Where we're heading to $1 billion in ARR. Well, who can write a check of 11 billion? Because that is roughly your multiple. That could very well be the public markets. So
you might end up public again. Well, I got to ask you, what did you think of the announcement from Google this week that they're back buying Wiz, which is an Israeli cybersecurity company?
Yep.
What is it, 30 billion or something?
More.
35, right?
What is Wiz's ARR? Do you have any idea?
I think that they're going to be close to $1 billion.
Okay.
So an insane multiple.
Insane multiple.
Yeah.
30x?
That's a ZERP era multiple.
That's an insane multiple. But for Google, who need to beef up their cloud infrastructure and offering, competing with Microsoft and AWS, they're sitting on so much cash they don't know what to do with. So for them, a deal like that makes sense.
Could that be a possible exit for you in 3 years?
You look at
Not necessarily Google, but a Google
one
type.
of the big players.
Yes, for sure. One of the big strategics, absolutely.
Good.
Yeah, I think that probably sets you up pretty well, though. I mean, 30 times multiple, that's better than the 10 multiple that you were thinking.
Yeah. I was going to ask you, so as you going back to the scaling and, having done this, multiple times before, obviously you had an advantage, but early on, I got to believe you took money from KKR, from Goldman Sachs. I mean, these are some of the, the best people in the industry. How much time did you spend raising money versus running your business, and how has that changed as you scaled the business?
Yep.
All right, I'm going to have to confess. I never created a pitch deck ever.
You're one of the few, my friend.
No.
Okay, we got to hear about this.
If you build your startup and you get escape velocity, you are finding yourself with hockey stick graphs almost organically before VC. I mean, I spent $1 million of my own money just as my own angel, if you will. You will not have to go fundraising. They will knock on your door, and then you're going to have to choose the best, the cleanest term sheet that you can possibly get. And then those folks are going to carry you into the next level. You guys are very, very familiar with the fact that it's a whole ecosystem where the initial investor brings in the next one and the next one and the next one, and this is your IPO path. So that's how we kind of did it.
Well, it's interesting you say that, because one of the things that, we actually argue this at Florida Funders internally, debate, probably a better word. What the exit strategy is of a company when we're investing in it. And I've always been of the philosophy, I'm not looking at what the exit strategy is. If they build a great company and they execute, and like you did, and they've got product market fit and they've got that hockey stick going, somebody's going to want to buy them. They'll have plenty of exit options.
Very much so. Although it depends a bit on who you are and when in the whole trajectory you are. Because obviously when you're public and you get acquired by private equity, their thesis includes an exit strategy literally before they even buy you. So it depends on where you are in your journey.
Yeah, I think, Tom, to your point, when we're talking about it, we're talking early, pre-seed, seed, early Series A.
Sure.
Yeah. If a private equity firm is coming in, they're going to want to know if we're putting, hundreds of millions of dollars.
It's different. If you just make sure you grow, 50, 60, 100% per year for your first 5 years, you don't have to worry about exits.
From your lips to God's ears.
Yeah, from your lips to God's ears. That's a good way of saying it. Because that's one thing that we're always looking at our founders and preaching to them is, look, 25-30% growth rate at your stage is not acceptable.
No, God, no. That's what we are supposed to be doing at
Yeah.
Yeah,
at
that's what you're
our.
supposed to be doing
when you're an enterprise company.
Yeah, we like to see them doubling every year. That's kind of our
Absolutely.
our thesis.
Yep.
I wanted to ask you real quick, because you're building a platform now. Do you see your competitors out there as like the CrowdStrikes and Palo Altos of the world now?
No, because they are very focused on the security software infrastructure type products. CrowdStrike is a good example. They have a platform and they do a whole bunch of things that is still focused on the call it information security on a broad level. They do not focus on the human side. However, we are emulating the platform strategy of CrowdStrike and Palo Alto, because the customer does need a single pane of glass and they do need a series of modules. Well, throw that word away, that's agent. And those are all AI driven agents that are going to be having a specific function. It's all beautifully integrated and it's adaptive. So our main move has gone from you do campaigns to a group of customers, meaning we're talking now end users in a customer, to we have a single end user, we have a risk score, we know what that end user does, and we provide them with individual adaptive training for them to decrease their risk score. So yes, platform strategy, no competition to Palo Alto or any of the existing InfoSec players. Does that answer your question?
Yeah, great answer.
To piggyback off that, who do you guys compete with at this point? I mean, once again, you created this category, but I'm assuming there's some players coming after you guys. Who are you guys going head to head against?
It depends on the territory. US is different from Europe and Asia Pacific. It also depends on the tier that you're talking about. Proofpoint, for instance, competes in the upper mid, um, and they have a security awareness training offering that they often just throw in. So we compete with them in that sector. Mimecast is slightly lower in that call it mid market, and they are more focused on international. So it depends a bit. We recently acquired a company in the UK. They're called Egress. And what Egress has is email security. And there's a couple of different flavors of email security. You have inbound, which is, filter out the spam and, phishing attacks. But there's also outbound. Tom, have you ever sent an email to, it's probably better the other way around, Sax, have you ever sent an email to Tom, but it went to the wrong Tom instead of Tom Wallace?
Yes.
Well, that is the outbound email security. If that would have been confidential information, that would be a data breach. So we do that too. And then there's encryption. And so
I've done that one where I send to the wrong person and I say something. Yeah, it's been pretty embarrassing.
I've seen you do that a few times.
Totally. So in that space, we're competing with other people. This lives in the Microsoft 365 environment. So there's a company called Abnormal, and we compete with them in that space. So it varies.
Yeah. Well, we're running short on time. Anything else, Sax?
No, I think let's get into the lightning round, right, Tom?
Okay. Stu, this has been great. So we wrap up with what we call the lightning round. I'm just going to ask you kind of a series of questions and give short answers. And the one I always like to start with is, we're sitting here, what is it, March 19th, 2025. Bitcoin is backed up. It's at about 81,000, 2,000, something like that. If you put look into your crystal ball, a year from now, what's the price of Bitcoin?
75.
Oh,
all right. I like that.
All right.
Contrarian view than our typical.
Usually we get like 250,000 or whatever. Kathy Wood, by the way, we had her on, or we interviewed her at our investor summit, which we just had again this year. We do it every February. And 2 years ago, she said Bitcoin was probably sitting at about 15 or 20. She said, "Oh, hit 100 grand before the end of the year," and she called it to pretty much the penny. When you look at artificial intelligence and the impact it's going to have on all of us and all of society, just like the internet did back in '95 and just like the smartphone did in 2006, do you see AI net overall being a job creator or a job killer?
That depends on which type of jobs you are looking at. White collar, job killer.
Okay.
All
right. And when you look at the war that's going on or that's upcoming in the whole robo-taxi autonomous vehicle space, there's obviously Elon's positioning Tesla to be the big player. There's Waymo with Google. Uber's going to be in there somewhere, maybe with Waymo. Who do you see winning that battle? Or is it some startup, some Stu from 10 years ago that's in that 10 by 10 office? Is that the winner? Who do you see winning this game?
That is a hard call because the technology isn't quite there, but it hasn't been quite there for almost 10 years.
Yeah.
And it may be that it's going to be almost quite there for another 5. It's just a very hard problem to solve. Nobody has completely done it. And once you're in one of these things, it's slow. I mean, I drive a Tesla Plaid with full driving. I turn it on, and it's like I'm bored. This is not. It's great for the highway. For city, never mind. So too early to call.
Okay.
right.
All right. And then when you look at artificial intelligence at a macro level, everybody seems to think the Mag 7 are the ones that are going to be the big winners and really dominating AI. At Florida Funders, we're founders like you and startup guys. We think there's again, some college kid in a dorm room that's building a startup that will be the predominant player. Where do you fall on this? How do you see this working out?
Large language models are a commodity already. Where you will find value as an investor is someone who has a depth of domain expertise and is able to create a vertical, call it agent, that has all that domain expertise built in. And that's where the value add is. And that is where the expansion is going to happen. So that's what I would invest in.
Instead of vertical SaaS, we got vertical agents.
Yeah,
that's
we actually think about that.
100%.
Think about. I'll just use a law firm because I hate lawyers.
That's off the record, by the way. That's
Okay.
off the record.
No, I don't hate all lawyers. A lot of my friends are lawyers, but they're a necessary evil. I'll put it that way. But you think about law firms and all these lawyers run around in the hierarchy and they're billing at different hourly rates and you're getting billed by the hour as a customer. We use lawyers every day. It seems to us that there's going to be a new type of law firm that doesn't bill by the hour and has these agents.
Yep.
And it's really it's a value-based billing situation.
Yeah, let me introduce a new acronym that you may never have heard. It's CEE, and it stands for a company extinction event. And for many of these lawyers, accountants, these high-level professionals, AI may very well be a CEE for them.
Yep.
Unless
I never heard that acronym.
I didn't
before.
either, but I like it.
Did you make that up?
Yes, this is a term that I created.
I love it.
Yes.
So good.
2 more, and then we have to run.
What's that?
2 more questions, and then we have to run.
Okay. Okay, I only have one more. um, you know, DeepSeek came out of nowhere. Fast follower. Used the word fast follower earlier, and DeepSeek was obviously a fast follower. Do you see the Chinese as a huge threat to the U.S. in the artificial intelligence war? And do you see it really down between us two countries as who's going to lead AI?
DeepSeek sounded like it came out of nowhere, but they did have a long track record. They've done a couple of very smart things, but they've done what the Chinese generally always do. They just ripped off everyone else's intellectual property and did a few smart things, and there's DeepSeek. Bigger picture, yes, China is a massive threat in the AI space, and they have no qualms about safe AI and anything else. So there is a big risk there.
Yeah, I think we all agree on that. Okay, Stu, this has been great. Thank you so much. It's so good to see you again, and congratulations on all your success at KnowBe4. And we'll continue to watch and see great and expect to see, and I'm sure we'll see great things coming from you and from KnowBe4.
Thank you very much.
Thank you so much, Stu. And if everybody enjoyed the content today, I'm sure you enjoyed hearing Stu and his great story. Please throw us a like on Instagram, YouTube, LinkedIn. Throw us a follow. Tom and I love doing this, and we know our audience really enjoys it. So thanks to everybody for being here. Stu, thanks again.
Thank you.
Thanks for spending your time with Skin in the Game VC today. If you want to learn more about investing in early-stage tech like a venture capitalist, be sure to visit the Florida Funders website at floridafunders.com. Join our angel network at no cost and get access to Florida Funders VC-vetted investment opportunities in the next great breakout tech companies.